Hello traders, Gary Wagner here, just about 10:15 in Honolulu, 3:15 in New York on Monday, November the 9th, 2015, and this is the Daily Report for Gold and Silver. We have a slight uptick in the gold market today, trading $2 to $2.50 higher, with the rest of the precious metals complex continuing under pressure. First to gold, 1090, our current print roughly, low 1087, high 1094. As you can see, very little range on the day and a slight uptick to that. When we look at silver, silver is under some pretty dramatic pressure, off about 1.8% on the day, down 26 cents at 14.15. Now, when we look at the low, 14.45, the high 14.79, you can see that the market has absolutely been under pressure and continues to do that. We genuinely do not see any kind of technical support for about another dime, or roughly 1440, and we'll talk about that, time permitting, at the end of the show. Let's look at gold. You know, after the kind of carnage that we have seen over this last couple of trading weeks, considering that this market really began this sell-off after hitting this high at 1191, we've seen this market have consistent sell days, except for two green candles within this entire area up until today. Now, today's activity, although it is very quiet and is showing a little bit of resilience, this is a daily chart, of course, small green candle in there, nothing can really be made of the overall move that we have seen. And if anything, we see the potential for the downtrend that we have seen in gold possibly continuing. And really, one of the best ways to look at gold is to look at it in terms of a Japanese average chart, because what that gives us is a indication of strength of trend. And as you know, we've been looking at this over the last couple of weeks. Now, even with an up day, and that's of course when you look at a candlestick chart, when you look at the Japanese average chart, you can see that we are still full-blown in a downward channel, because it uses a open as the midpoint of the prior candle. That's why you're getting the different kind of a look, feel, and information that is being derived from a candlestick chart. Now, still no upper wick, and the upper wick tells you that at no time did it trade to or above the midpoint. So that is a indication of some strength that continues in this market. And then secondly is body size. When we look at body size, we can see that it's still a fairly large candle. Now, as I've said all of last week, the one caveat with the Japanese average charts is they are going to lag behind, and anytime we get a real pivot in the market, a genuine pivot in the market, we're not going to see it in the Japanese average till about a session or two sessions pass. So a day to 2 days, of course, on our daily chart. Now, a little bit of information can be gleaned off of our half-a-day standard candlesticks. And what that information tells us is that although the market was trading slightly above this point during the day, you get this green candle coming in, the second part of the session actually closed a little bit below the open, closing at 90, where it opened about 92 or 93. But realize you've got almost no range within this day. So the one thing that we can say is that we've got a fairly consolidating market, and we have the potential for some consolidation. Now, you can really see that in a daily chart, and we'll go ahead and pull one up, but it's not that much different than the chart that we looked at, the half-a-day chart, except that you do have this green candle. There is absolutely no candlestick pattern. This could be part of a three-river morning star if we were to find some sort of support here, which, as I said, I don't really have any technical indication, but to get that kind of candle, or even a variation off of a three-river morning, you would need to see tomorrow's trading activity be a large green candle, meaning a sizable upside move. You would prefer to see the open be above this star here. This, of course, is our star that would be in the center of that, right in there. And you would not take this call. You would not take this call unless you got a confirming candle, and a confirming candle for a 3 3-day morning star, or 3-river morning star, would be something like this. In other words, what you would be seeing would be a day with a higher high, higher low, and a long-bodied candle. So to get any kind of indication that we were at a bottom in terms of straight candlestick patterns, we would need to see a couple of pretty strong up days. Now, where could this market in fact go, and what can we look for over this next week? Well, as you can see, when we compress the chart a little bit, what we find is that when we look at key areas of support, 1100, well, it broke through that, but that was the real last key area that we saw in which we could look for support, and now we're sitting considerably lower, $10 lower. But we've got these series of bottoms here at around 1080. We do have an extreme low at 1071, and the fact of the matter is that if we look at the actual range, so you've got 1100 on the high here, down to 1080 on the low, so you get an entire area in which the market consolidated before, formed a congestion pattern, and I think it's most likely that we will see this same congestion type pattern form again. In other words, what I'm looking for is some sort of sign of stabilization in price, and then from there at some point, whether it is a candlestick pattern such as 3-river morning, or in this case you get engulfing bullish followed by a confirming candle here, but we'll get some sort of candlesticks that indicate that. But up until that point, we've got to genuinely believe that there's not a tremendous amount of room to the downside, so going short doesn't really make that much sense. And we're not certainly ready to initiate a long position. We've received no technical confirmation of that. So we want to be sidelined until we either break below these lows or we get consolidation in the market and some sort of a key reversal pattern that's telling us it's time for that market to move higher. So traders, what about silver? Well, as gold has been drifting lower, silver's been doing the same. This being a weekly chart, you can genuinely see that this market has come off of these highs above 16, about 1650 in this area were the highs, and since that point we have seen this market genuinely track lower. We also have an extreme low that came in right at around $14, and that's this low right here, but the majority of the lows right now seem to track at about the price point that silver's at, and that's why at the beginning of the show I said we could find some real support at about $14.40 on silver. We'll have to see. Again, we'd want some sort of a pivot pattern that really gave us a strong indication, but within this particular market, we're about a dime away for looking for some kind of low in silver. This has been Gary Wagner, wishing you as always good trading. We will talk to you tomorrow on Tuesday for another daily update and review. Bye-bye.